Hey everyone, welcome back to Kitco News. I'm Jeremy Safran. After a massive rally that put gold in the spotlight as the top performing asset in recent months, Bitcoin now appears set to take the lead. Following Donald Trump's recent election victory, we've seen Bitcoin overtake silver to become the world's 8th largest asset, with a market cap reaching $1.7 trillion. Meanwhile, BlackRock's spot Bitcoin ETF has already surpassed its gold fund in size, driven by record demand, all within just a few months of its launch. Now, my next guest believes we may be witnessing a melt-up in markets and a shift from gold to Bitcoin as the best performing asset, at least for now. Joining us to discuss how long Bitcoin's rally might last, the latest moves in gold and silver, and of course what price levels the future would hold, is Florian Grummes. Now, Florian is of course the managing director of Midas Touch Consulting, with nearly 30 years in the financial markets. He's known for his contrarian perspective. He was the first one to predict the crypto winter back in January of 2018, and his calls this year were also spot on. Welcome back. Great to see you, Florian.
Thanks, Jeremy. Pleasure to finally meet you, and thanks for having me.
It's great to finally meet you, and such a week of news. Before we get into Bitcoin and gold, which of course we're going to cover, I want to get your macro outlook going into the year end, because we just heard from Fed Chair Jerome Powell on Thursday during his speech at the Dallas Regional Chamber, where he emphasized that there's no need to rush into rate cuts given the economy's continued strength. Now, he stated that, quote, "The economy is not sending any signals that we need to be in a hurry to lower rates." And he also warned that the journey to the Fed's 2% inflation target could be, as he put it, quote, "sometimes bumpy." And of course, we're seeing that in the latest inflation numbers as well. The latest report from the Labor Department showed a producer price index. Now, that's the key measure of inflation before it reaches consumers like you or me, up about 2.4% year over year, accelerating from 1.9% back in September. And U.S. consumer price inflation also remained firmer in October, with the headline measure rising 2.6 from a year before, marking, of course, the first acceleration on an annual basis since March. So what's your take here, Florian? Can the Fed afford to hold back on rate cuts, or is there a risk of waiting too long?
I think for now they can hold back a little bit longer than many maybe anticipated. But I think the cycle has changed. They are in a lowering cycle now. They started at the 18th of September this year, and coincidentally, they did the same in 2007 on the 18th of September. And back then there was zero data showing that the financial crisis was around the corner, basically. So I'm cautious towards 2025, but I'm very bullish until the end of the year at least. And I think we are in a melt-up. You mentioned it already. The US stock market's leading everything higher. Bitcoin has taken over. We've seen a regime change from gold to Bitcoin. And I think this will last until the end of the year, at least maybe into spring, early summer next year.
Okay, we're going to obviously get into that because I want to break that down and get your outlook on both of those asset classes. But back to the Fed just for a second, because, you know, since September, the Federal Reserve lowered rates by 75 basis points, and we have one more FOMC meeting in December, with inflation still problematic. Now, after Powell spoke Thursday, traders pared back their expectations for an interest rate cut in December. The CME FedWatch tool is now pricing in a 38% chance of the Fed holding rates steady in December, and now only a 62% chance of another rate cut. We discussed this a little bit there, Florian, but do you agree? I mean, do you think that this is enough ammo to give the Fed some ammo to pause in December?
For now, maybe yes. To be honest, I mean, there is always a lot of stuff that can happen in a few weeks. And, perceptions are changing on a daily basis often. So I don't know. We have to see. I don't think it matters too much in the short term if they lower or not in December. I think it's all driven by the liquidity, which seems to be more than enough in the system after all this crazy fiscal stimulus throughout the last 2 years. And then again, don't forget, I mean, it's all about psychology, and people are used to the year-end rally, and they are focusing on it. And so that's probably much more important when it comes to the trends in the markets than whether they will lower or not in December. I think more interestingly will be how it plays out next year.
Okay, I see. So your macro outlook going into this year is it, the markets are quite ripping along here. Do you think that's going to continue up until next year, or is it going to continue on past then too?
Yeah, as I said, I think melt up until end of the year is most likely.
Yeah.
Would be surprised. I think there's no reason for the markets to drastically change. I mean, of course, there could always be a black swan suddenly showing up, but I don't see any of those risks at the moment. I think rather into next year, then probably step by step, this rally might at least run a little bit out of steam. I mean, we've seen the problems with Supermicro very recently. The accounting firm had to withdraw, and that is the third largest client of NVIDIA. So there is quite a few question marks around that case. And if this gets bigger next year and gets more attention, well, I mean, things could change drastically.
Yeah, as you mentioned it, I mean, are we in a place where we could see a recession still take place, or are you more in the soft landing camp?
That's a good question, and it's a difficult question, and that's a question that I think many analysts and investors are trying to come up with the right answer for the last 2-3 years already. I mean, as long as they continue to actually print and stimulate the economy, and I mean, it's not only the US, but we've seen recently another round of stimulus out of China. I think the Europeans will be forced very soon to do something similar again. This whole thing could continue longer because in the end of the day, the markets are driven by money flow and liquidity, and it seems there's still enough there. So for now, there's no really serious signal that this whole rally melt up is ending. But as we also know, if things get up too steep, too vertically at some point, it turns around violently, right? So
they always say what goes up must come down. I mean, what about the escalating debt problems? It remains a central issue. We're inches away from the U.S. national debt crossing past $36 trillion. I mean, you wrote in one of your latest reports that America is on a fast track to bankruptcy. So how fast are we approaching this point of no return here?
Yeah, faster than many of us actually are aware of.
Right.
At the same time, I think you can make the argument that if there would be any team that could tackle those problems, it would probably be the new team that Mr. Trump has put together. I mean, if they really going to be as disruptive as they are now actually promising, I mean, things could change drastically. And this could actually mean that America is coming back as a powerhouse. So it's going to be interesting how this all plays out. But of course, the escalating debt is a big problem. The good thing for America is that most of the other countries do not look much better, So, I mean, if you look into the Eurozone, France is terrible shape. Germany is okay, but Germany is in a recession. The economy is doing really bad here. I mentioned China already. I mean, the problems are everywhere, right? And the main takeaway, and that's also obviously one driver for Bitcoin and gold, bonds are not that safe haven anymore that they used to be over the last 40 years. So if governments have to continue to print and the markets might demand higher interest rates than actually the central bankers want to dictate, that's where the problems are coming.
Yeah, well said. Okay, well then let's shift our focus to assets. I do want to point out that the last time you were on back in May, you said that Bitcoin was at risk of dropping to $50,000, that level during the weaker summer months, and you were pretty spot on, as in August, Bitcoin did hit a low of around $51,000. You also forecasted that towards the end of the year, Bitcoin would break out above 75,000, quickly take us to 90. It's exactly what we saw happen post-election. I mean, since November 5th, Bitcoin has surged around 30%, shattering previous records, soaring past that $90,000 mark. So first off, let's take a look at how much of this. Let's take a look at this price rally. I mean, how much room is there to go up? We keep looking at these all-time highs, Florian.
Yeah, I mean, we've seen a massive thrust breakout in Bitcoin since basically Donald Trump got elected last week. And the charts were telling that for quite some time already. And here we are close to 100K already. I think we're going to see that number rather sooner than later. And from there, it doesn't take much to the next target, which is around 130K. But if you want, I can show you some charts and we can look at this in a bit more of a detailed.
Yeah, let's do that, please.
So I think, obviously, I'm cooking with water like everybody else, so I have no crystal ball here. But it is important to understand that we now have a Bitcoin president. Unbelievable. I really love that meme. Yeah, I think it changed the perception completely. And I think it's another level, another step towards mass adoption here for Bitcoin. Yeah, as we could see over the last 7-8 days, Bitcoin up massively after Donald Trump winning the election here. And the big takeaway in the bigger picture, we've been working on this cup and handle pattern here in Bitcoin. And finally, the breakout is there. There has been 3 years of compressed energy in that pattern. Bitcoin has a long consolidation and correction behind it. And yeah, it's been breaking out. And if you want to have an idea of where it could go in the short term, you take the depth of that handle and put it on the breakout level, basically, or add it to the breakout level. And we should end up around 98,000, 100,000, more or less. And yeah, we've been already just $8,000 away from that number. So I think we're going to see that maybe even until the end of the year.
Okay.
I think chances are actually pretty good. And the second target is the depth of the cup. And that would take us to, roughly speaking, $130,000. And that might be still a bit conservative to many crypto bros, but I think we should do it step by step. So that's the next two targets that I see in the charts. And then from there, we should take a step back and look at it again. I think, of course, in the short term, the market is pretty overbought already. But as we know, I mean, these rallies in Bitcoin, they can be very steep and fast and intensive. So yeah, 100,000 and then 130,000 are the next two targets for me here in Bitcoin. And if we zoom in a bit into the daily chart, this is obviously the neckline of that cup and handle pattern, and which used to be resistance, obviously is now support. So in case we should get a pullback, for anybody who has missed the train, so to speak, that would be the ideal entry over the next few weeks, maybe 2 or 3 months, if it would even pull back to that number. So that means somewhere around 75 to 80,000 maybe. I'm not sure if it really will get back to that number, but if it should, I think it's a really good buying opportunity for any of the latecomers. More likely probably is that it will turn around rather quickly, maybe around 85,000 already. So that's my outlook for the next few weeks and months in Bitcoin, and obviously that will also pull all the other coins with him. So yeah, I think it's time to be bullish. Obviously, no reason to sell your Bitcoin here.
Yeah, it's so interesting. I mean, there's obviously so much excitement over Bitcoin, and we can see this liquidity coming in. I mean, at what point do you know when you look at a chart if it's just overheated or euphoric? I mean, you mentioned that pullback around 75 to 80,000. You're buying the dip.
Right. I mean, we are in an uptrend, so your job is to buy the dip now, right?
Right.
Just don't jump on the train right now, because that's a little bit tricky. Or let's say, don't run behind the train. But if it comes back down to that former resistance zone, it would be a wonderful opportunity to basically get on if you have missed the train, so to speak.
Okay, and so when we look at the year-end price and we go into 2025, I mean, you brought out some numbers there, 100,000?
Yeah, until end of the year. I mean, we have now mid of November. I mean, that's another 6 weeks.
Right.
It rallied nearly 20K in a week, more than 20K in a week. So, I mean, I think 100K until year end is very likely here, and 130 by next spring also very likely, yes.
Yeah, it's been so fascinating to watch. Okay, well, you talked about Donald Trump before and how he's positioned himself as that Bitcoin president. He's been very crypto friendly throughout his 2024 campaign, and the markets obviously are taking notice here. He announced plans to make America the world's capital for crypto and Bitcoin, with promises to drive deregulation and introduce more business-friendly policies for the crypto industry. Trump has also pledged to replace the SEC chief Gary Gensler with a more crypto-friendly appointee, and proposed a strategic national Bitcoin reserve, mirroring reserves held for, of course, oil and gold. And those are just some of the high-profile commitments that we've heard from him. So how many of these promises do you think Trump will actually be able to fulfill?
That's another good question, Jeremy. And I obviously have no clue. I mean,
Yeah.
he's been very proactive in his first term. I mean, he's also promising more than he in the end of the day did. But then again, I think, I mean, it's his second term. He will not run again. So I think he will try to realize most of his plans rather aggressively. I mean, we have to assume that he might do it. Yeah.
Yeah.
And he's not
Okay.
a real politician, right? And I mean, that's why people like him so much. I mean, most of the politicians promise a lot and then don't fulfill anything or just a very small portion of it. So I think he's been to take it serious. Yeah.
Right. But I mean, it's been speculative until this point. He's made some promises, none of them been fulfilled. So which is the most significant one for the prices long term?
If he would really come up with this national reserve of Bitcoin, I think that would be a huge changer. I mean, it would force probably other countries to follow. And I mean, that could propel Bitcoin to totally different price universe.
Yeah, wild times. Okay, earlier I mentioned that Bitcoin has overtaken silver to become the world's 8th largest asset, with a market cap now reaching $1.7 trillion. Still, it has a long way to go to match gold's massive market cap at around $17.7 trillion. You know, we're also seeing that in just 10 months, BlackRock's iShare Bitcoin Trust now above $33 billion in assets under management. It's already grown a lot larger than its iShares Gold Trust. So the question is, how quickly could Bitcoin continue to climb the ladder? And just how much of this game changer, what is it going to look like for the spot Bitcoin ETFs?
Yeah, I mean, of course. I mean, that's been the big change at the beginning of this year with the introduction or the start of the trading of those Bitcoin spot ETFs. Obviously, now any and all institutional money has access to Bitcoin on a mouse click, and the same is true for any private retail investor. So that has changed the whole landscape dramatically, and we've seen it just the last 6-7 days, the effects of it. So I'm not sure how fast and if it can overtake gold anytime soon. We have a strong buy signal now for Bitcoin in the Bitcoin gold ratio after the ratio had pulled back quite a lot actually over the last 7-8 months. Yeah, on a long-term basis, if you compare gold to Bitcoin, of course, the performance of Bitcoin is mind-blowing, and it still is a long way to take over gold. But maybe, who knows? I mean, if they really come up with this national Bitcoin reserve, it could actually really lead to that.
Yeah, I mean, how does this work with your thesis, though, that Bitcoin's original idea has been perverted by Wall Street with these ETFs? I mean, how much volume do you see leaving Bitcoin because of these concerns versus new exposure coming via these ETFs? I mean, does that change your own exposure here?
My exposure depends on the price action primarily.
Right.
I think that the original idea has been perverted. I think that Wall Street has realized that they cannot stop the network, so they embraced it basically. I'm not a fan of the fact that some of the largest wealth managers in this world who already own way too much things on this planet now already also become some of the largest owners of Bitcoin. And this is always opening up the doors to manipulation and weird shenanigan in the market. So that's not the original idea of an alternative money, basically. It's now becoming part of the fiat money system, basically.
Right. Okay. So bullish on Bitcoin, still some room to grow, and make sure you buy the dips. Okay. Let's switch over to gold. Since the election, it's down more than 6%, falling from new record highs of about $2,700 to below $2,600 an ounce. Now, gold is still up about 25% year to date. So what's your take on the sell-off here? What's the likely floor for gold prices in this downtrend?
Yeah, I wrote a piece 2 weeks ago where I said basically that I expected a wave of profit taking in the gold market if Donald Trump would win. And that played out quite exactly. I think what needs to be understood is there has been a war premium somehow being building up over the last 1 or 2 years. Actually, probably it started with the invasion of Russia into Ukraine, and then the sanctions against Russia, which has basically forced a lot of central banks on this planet to at least start diversifying their assets away from the dollar, and that the only way they could do this is by buying gold. So that was basically becoming clear in 2 years ago in October, November at the triple low at 16.15 in gold, when news came out that many central banks started buying gold, and we have seen since then massive central bank buying all over the place basically, and they have been one of the big drivers behind the strong gold rally over the last 2 years. And yeah, so now we are here. We've seen a short-term top at $2,790, a heck of a rally over the last 12 months. We have seen, we discussed it already, we've seen a regime change now. I think Bitcoin is taken over and gold is taking a breather, which is absolutely healthy and good after such a rally. The market needs to breathe out as well. And so it came down. Today we've seen a low at 2,535, which was the resistance from late summer this year. Once gold took out that resistance zone, we had this massive, strong final rally over the last 2 months.
Yeah.
If we zoom out in the bigger picture, I don't believe that this is a long-term final important top that we've seen 2 weeks ago, simply because of the fact that silver hasn't shown up to the party yet.
Right.
But could it be a bit more of a multi-week breather and maybe even go a bit lower from here? Yes, it's possible. Again, I have some charts that maybe will help us to get it.
Yeah, let's pull those up, because I mean, when does gold go back up based on these historical patterns?
Right. So in gold as well, I mean, it seems like everything's about cup and handle pattern these days. But in gold, actually, we had a really big one over the last 13 years developing. And I've been pounding the table over the last basically between 2020 and 2023, I said, guys, we need more patience here, and this will take a bit more time until this handle on the right side is basically finished. And finally, gold broke out last December, and then had this massive rally since end of February, and we've seen a short-term top just 2 weeks ago. So this whole pattern has been bullish, and it should still take us to higher price levels. As you can see, we've reached basically the target out of that handle. This is the 2,535, which I also just mentioned. And we have another target which sits around, I would say, $3,080 to $3,100. That's the depth of the cup. So this is still outstanding, and I assume it will come at some point. The big question, and that is, by the way, the textbook cup and handle pattern, and you can use that also for the Bitcoin chart that I just showed before. But for the gold case, it means that we had this 13-year basically correction, consolidation, then finally this breakout here in December and early February, mid-February this year. And now, is this maybe the first breakout, and now the market is coming back to test this former resistance to support? That could be the worst case that I see for gold over the next few weeks, and probably in that case it would take more like 1 to 3 months, I guess. That would mean a pullback to maybe $2,200. So that is the worst case. Given the textbook here. Again, if we look at the weekly chart, you can see this is the neckline of that cup and handle. But gold is in a beautiful uptrend channel here. And you can see this midline of the uptrend channel used to be resistance, then it was support. And if we just would pull back to that middle trend line of that upward trend channel, basically, we are actually not far away anymore. It could mean maybe 2,450, 2,430. Those are the tops or the highs from summer this year, which are obviously now as well giving support. And the little bit worrisome factor here, and that would speak to the worst case scenario that I just described before, is we have a clear sell signal now here on the weekly chart. And if that stochastic would like to pull back into an oversold setup, it really could take actually quite a few weeks here. So we have to be cautious a little bit, I think, in the short term. You can see here on the daily chart after this massive rally, it could drop all the way to maybe the 200-day moving average, which would be here the green circle. The 50-day moving average obviously has not helped the sell-off in the last few days. Gold had been dropping like a stone. So the 200-day moving average is coming in around 2,390-ish. It's rising quickly. So yeah, again, 2,400, 2,450 in that range. That is maybe the normal correction kind of expectation here. And you can see in the short term, gold is very oversold. So I want to see now how gold actually reacts after it had been dropping so hard over the last 2 weeks. And that bounce, if there is a bounce, that will tell us basically how healthy the gold market is in the short to midterm. If we just get the so-called dead cat bounce, and then it quickly rolls over again, it should tell us that there is much more downside probably. If it really maybe has seen the lows today already at 2,535, this bounce that I expect here should be actually strong, and it should take us up to 2,700, 2,750 probably rather quickly. That would tell us, okay, we're going to have just a multi-week breather here, consolidation, and then the rally directly will continue in the first quarter as of next year. So I'm a bit cautious. I didn't like to see it dropping like a stone here, to be very honest. Main probability, I think, is a pullback to this 200-day moving average here. That would be this blue box, more or less. And worst case, again, would be the neckline of that cup and handle, or a little bit higher, the lows from spring between 2,800 and between 2,300 and $2,280. Let's see. The problem in the gold market is that we had a very euphoric overbought sentiment. So the mood has been very euphoric and optimistic over the last few weeks. And usually it takes a bit of a larger and more painful breather to calm things down. And if we look at the commitment of trades, that means how the players in the futures markets are positioned. And here I always, of course, look at the commercial players, which is, in the end of the day, your Barrick, your Newmont, and some of the big gold producers who hedge themselves. And they have used these high gold prices to hedge themselves, which makes sense out of their perspective. But it means that they are short. And there's obviously, for every long contract, there's a short contract. So that means there's also a lot of people that have been long. And if they take profits, price can only come down. And if you compare those positionings, the red circle here is where we are right now, more than 280,000 short contracts held by the commercial traders. That is a warning signal. And if you go back here in the past, you can see that usually that initiated always a breather and a pullback in the gold price. So yes, it's true. The paper gold markets in the Western world don't have as much influence anymore as they used to have. The physical demand out of India and China obviously plays a much bigger role now. And since the gold exchange in Shanghai is doing business, the influence of the paper gold trade in the COMEX and in the LBMA has definitely lost influence. But still, you have a lot of commercial hedgers here being short, while on the other side, you have a lot of speculators being long. And that usually can only be solved by lower prices. So right. That's still also overhanging as a negative here over the gold market in the short term.
Okay, so oversold. I mean, Florian, you mentioned there that there was a worst case scenario in terms of the level of price, but I kind of missed it. So tell me one more time in the audience, what was that level if things go a little bit awry?
Yeah, I mentioned the cup and handle pattern. And I said that usually textbook tells us once you have the breakout, you have a steep vertical rally, and then the market comes back and tests former resistance, whether it's support. And that would mean a pullback towards maybe 2,170, 2,200. That probably is the worst case. We are still far away from that number, obviously. So I'm not sure if it really gets there. But that's why I showed the commitment of trades and the sentiment to give a bit more of a background to this maybe bearish scenario here. The one thing that we also need to understand, and that's what I think is also important here, usually over the last 15 years, gold always found a bottom somewhere in mid-December, actually at the last FOMC meeting, the one that we talked about in the beginning. That usually brings the turning point for gold. So if we have a shallow correction, I think waiting for the next 4 weeks until mid-December and then evaluating where we are in the gold market makes the most sense for me personally right now.
Right.
because usually you get this turning point in mid-December with the last FOMC meeting, and out of that, gold is always able to rally into spring as of next year. So that's basically the seasonal pattern here. And if we put this all together, I have two scenarios for you. So the first one is we've seen the steep drop over the last 2 weeks here in gold, and if this low from today at 2,535 actually is already the low of that pullback, because we're so oversold in the short term, and gold started to bounce a little bit already today and maybe can bounce a little further, that would mean we might just need a few weeks here, having a kind of a triangle consolidation and then breaking out into January, February. That would be the best case scenario, I would say. And the mid case scenario, if you say it like this, is a bit of a sideways consolidation, and then one more lower low, probably testing the 200-day moving average around $2,400. And from there, the rally can continue and take us higher above 3,000 in spring next year. So those are the two main scenarios that I see. The worst case, we laid it out, would be a pullback to the former resistance, $2,100 to $2,200, which is still far away and would mean a lot of pain actually still is waiting for the gold bugs.
Yeah, still pain, but even a year ago, $2,000, like that was a pretty good price. Is this the new bottom?
I think that we won't see gold below $2,000 anytime soon, if at all, in our lives again.
Right. Wow.
The only thing that gold could drop below that number is if we get a big financial crisis, a liquidity crunch, and everything's falling down, similar to 2007. Then yes, but other than that, I don't think that gold will come below $2,000 anytime.
Yeah. I mean, we still get that December FOMC meeting as well. I wonder how much of this is seasonality, as you just mentioned,
Well, I have one chart here from 2016 when Donald Trump got elected for the first time. It was a big surprise back then. And this red circle here was the spike in the night of his election, and after that, gold sold off like a stone for 7 weeks into mid of December. So if something similar were to happen this time, I think the second scenario that I told you, pull back towards the 200-day moving average, is the most likely. Yeah. And I don't know why the market suddenly shifts around so dramatically and Donald Trump gets elected and gold is falling like a stone, but it seems that is what it is. So
the markets are smarter than you and I, my friend. Okay, I'd like to get you, always, right? I'd like to get your take on a new proposal coming out of the COP29 or COP29 summit. It's the 29th annual UN Climate Conference. This proposal suggests that the International Monetary Fund, or the IMF, could sell a small portion of its gold reserves to provide crucial debt relief for low-income countries struggling with the impacts of climate-related disasters. A study from Boston University's Global Development Center estimates that selling 4% of the IMF's gold, around $9.5 billion at current prices, could offer substantial relief to countries facing mounting debt. Now, the IMF has about 90.5 million ounces of gold in its balance sheet. This is a legacy from its founding in 1944 when member countries paid their quotas in gold. Now the IMF hasn't sold in over a decade, and some wonder if institutions should capitalize on this year's gold spikes to address various urgent needs or to hold on to them in reserves for their long-term value. I mean, could you break this down a little bit for us? How do you view this proposal from the IMF's perspective, and what are the potential trade-offs involved in selling a portion of their gold reserves?
I mean, I can tell you that, and I think it's true for any of the viewers, it's never a good idea to sell your gold, right? Because all this money, you want to store it for the long term. I mean, of course, you also have it for worst case scenarios or for difficult times. So if you really need liquidity and sell a part of it, okay, you can do it. That's also the idea of it, right? But I find this whole idea of the IMF totally ridiculous. I mean, I don't see any sense in it. It's actually their job to stabilize the system, and if they sell these gold reserves, I mean, I don't think it makes any sense, to be really honest. Just the description that you just read, I mean, it's so absurd, the whole thing, and we all know that it's absurd. Nobody can control the climate, And to believe that with money you could fix those problems, and then they sell some hard assets that have been stored for decades probably, and I don't see any sense in that. Again, the IMF should work on stability and keep the reserves and actually increase the reserves, and not doing the opposite.
Yeah, bit of a contrary for sure. Okay, switch over to silver for me, my friend. It's down nearly 7% since the U.S. election, but it's still trading above $30 an ounce, up about 28% year to date. Is this your thesis on silver here? Is it different than gold?
Yeah, it is. I mean, silver has some features that gold doesn't have, right? And it's, especially its industrial demand. And when it comes to the pricing, it's the fact that it's lagging like crazy. I think the silver bucks are pretty much, unhappy or dissatisfied with the price action, given that gold has been recently trading up to 2,790, and silver just barely made it to 34.85, I think. So it's still trading far below its 90.80 high, which was also seen in 2011. But we also know that is the typical character of silver. It's always lagging. It's always coming late to the party. And when it comes to the party, it takes over for a short period of time and then it's crushing the party, right? Yeah. So, and I mentioned it before already, we haven't seen that behavior yet. So that tells me that this precious metals rally is not over. It tells me that the best is yet to come, even in the midterm. So in the very long, of course, I believe that gold is going much higher, above 5,000, above maybe even 10,000. It all depends on how much money will be printed in the future. Right. But this rally, which is now running since 2 years, we haven't seen really silver going bananas, so to speak. Mm-hmm. You know? And I think that's still coming. And you mentioned it, yeah, the $30 level is more or less holding, which is very positive. So this pullback over the last 2 weeks, silver has been stronger than it might have or should have been, maybe, given how steep and deep gold has been pulling back. I think it takes this breakout above $35, and then it can quickly run to $50. So that's the main target that I have for silver. I still think it could be seen until spring next year. Wow, it works as a magnet. It works as a magnet, and I have also some charts for silver here if you want.
Yeah, let's pull them up. I was so surprised that we haven't seen it come down below $30. I mean, is that the new resistance level here?
Yeah, I will show it on the charts. I mean, it used to be the resistance over the last 4 years, basically, and finally in spring of this year, I think it was in April and May, silver managed to break out, and of course, silver bucks had maybe expected a bit more of a firework afterwards. It went to 32.50 and then consolidated over the summer, came back down, and now just recently it went up to 34.85. So still not a very impressive price action. Of course, if you compare the numbers, at the end of the day, it already outperformed gold a little bit, but I think there is still much more upside for silver. So if you look on a very long-term picture, here the chart, you can see that basically these two tops that I just mentioned, 1980 and 2011 at $50, and right. Silver is trading here far below those two highs still. And this is actually the mother of all cup and handle patterns, because this is 40 years in the making. So that gives you an idea how much energy is being compressed here. And you can see it still takes some time within that handle probably. But we have a nice uptrend here, the green line that you can see now, and the target out of this cup and handle pattern is at least $100 for silver. On a logarithmic chart, it would take you to $700. So I think there's a lot of upside. There is probably new technologies coming to the market in the next few years that will increase physical demand for silver dramatically. But that's all still in the future, but it's coming. And if we zoom into the weekly chart, that's the former resistance we just talked about, which has now, of course, become support. So everything between $29 and $30 is already strong support. And after breaking out of this triangle, maybe just a shallow pullback here into this $30 level that we've seen today might be enough already. If not, we might pull back here towards this worst case, maybe 27, maybe 26.50, 27. That might be the worst case, which would mean testing this uptrend channel, or this uptrend line, which is in place since the COVID crash, which was here, the COVID crash. So that's the weekly chart. And if we zoom into the daily chart, you see the 200-day moving average is not far away. So I don't see too much downside here for silver, actually, within this uptrend channel. We have tested already the mid-trend line here. So again, there's strong support here. I don't see too much downside for silver. I actually think that besides the crypto and Bitcoin sector, silver is probably the most interesting play for the next 6 months.
Wow.
Or maybe even a bit longer. If it really starts to catch up violently and rallies to $50 until spring next year, I think silver stocks should go through the roof at some point. So
everyone's waiting for that. Everybody, Florian. Okay, well, you just mentioned, we are going to go from about 35 to 50 very, very quickly, and then you brought up $100 silver. When does that happen, technically?
Yeah, that's a good question. I mean, nobody can actually come up with the exact timing, obviously. I think it will take more time than many people assume and wish for or desire, right? But again, in the bigger picture, I mean, as long as you stack silver physically, you can sit through these volatile times and you can sit through pullbacks as well. The problem always with silver is when you trade with leverage or when you over allocate into those instruments and maybe too risky, small junior exploration stocks in the sector, right? Other than that, I mean, stacking silver coins and bars is not a bad idea, and it's actually not risky at all in the long run.
Yeah, so that $50 maybe this year. Do you think $100 within the decade?
Yeah, I'm sure that is very likely within a decade, $100, and $50 within next spring. I think is still my main scenario. Yeah.
What a fascinating time, my friend. Well, lots to get to. Florian Grummes is the managing director of the Midas Touch Consulting. Thank you for this, my friend. It was so wonderful to see how accurate you are. We'll get you back in a few months and we'll test those theories. Great to see you, Florian.
Thank you, Jeremy. Pleasure.
For all of us here at Kitco News, I'm Jeremy Safran. Thank you for watching. We're going to have some great content coming up, so don't forget to hit the subscribe button. We'll see you next time.